Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Tuesday, March the 23rd, 2010. Well, a nice bullish day today, and we had that change of trend that we thought was a good probability. We had a change of trend to the upside with a candle with a higher high and a higher low. Previous to that, we had a candle with a lower high and a lower low, so we had a first time frame downtrend, and it was very short-lived, very similar to what happened previously here, and it really says something about the strength of the underlying trend in this market. One way that we can actually see in our indicators how strong that trend is in that medium-term time frame is by looking at the Kijun-sen here. And we can see the very strong angle that it's pointing up at, and that reflects the very strong upside momentum in this market in the medium-term time frame at the moment. Now, that can work against us as well, and when this market becomes overextended, and markets do, they tend to exhaust, and there tends to be either a pullback or a congestion area. So the longer that this market moves higher and moves further away from the Kijun-sen and also the cloud, then the greater the chance that this trend in the second time frame will end. But we don't have any evidence of that at the moment. So we have a very large green bodied candle, and roughly about the same size as the previous green body, which tells us that the buyers have made as significant a net progress on the day between the open and the close as they did previously. So they've made some very strong net bullish progress. The other important thing is that they've taken out this resistance area on a very bullish candle, this resistance around 1169, and set this market up for an assault on 1179. The 1179 area is only a moderate level of potential resistance for this market. It wasn't a very strong area previously, but nonetheless it will be an area where the market may find resistance. But panning out, if we look to overhead resistance, we have around this 1200 region, a round number, and there is strong potential for resistance for this market if it does trade through the 1179 region. Now, the market is trading well up above the cloud or the Kumo and trading up above the Kijun-sen and Tenkan-sen, which means that in all three timeframes the market is bullish. We also have the Tenkan-sen trading up above the Kijun-sen, which gives us a bullish indication as well. So quite a very strong market, and also supported by the short-term dynamics with the bulls closing this market in control and showing some very strong commitment to taking this market higher. If this market does come off, then we would expect to find support down around the Tenkan-sen, which is at 1156, and that's also pointing up fairly sharply, reflecting the strong upside momentum. We can see here previously that the market found support there at the previous candle, so we could expect the market to find support there if it does come off. Failing that, we have a previous resistance area where the market might find support at 1150, then down to around the 1163 region, and then certainly at the Kijun-sen 1120. The previous region was 1133, and then down to the Kijun-sen around 1126, and very strong resistance all the way down. To the upside, though, as we've said, not terribly strong. Very strong support all the way down. To the upside, not a terribly strong resistance, though. So considering that the market is quite bullish and trading well above the cloud and up above the Kijun-sen and Tenkan-sen, the probability is that the trend will continue to the upside, and that these resistance areas around 1179 and potentially 1200 will be tested.